Bears are thriving in a global market sell-off. Good morning, guys. It's Keith Allen, and, well, probably not what you were hoping to wake up to this morning, but nonetheless, here we are, and things obviously looking pretty drastic here in the charts, not just for Bitcoin. This is not weekend whale games. This is part of a larger global market sell-off. Big pullback, big correction in Japan overnight. And of course, in pre-market hours, U.S. markets also have some pretty dire projections. And as we can see, Bitcoin also looking pretty rough here at the moment. But, is this a time to panic? Well, a lot of people are panicking, but you know the rule, right? You know, you know what Warren Buffett says, be greedy when people are fearful. That doesn't mean that this is a point to buy just yet. We've got to see where things bottom out, and there's a lot of potential different targets that we could see. We're going to dive into that. We're going to look at some of the other factors that are going to come into play here and see if we can figure things out. So the first thing I want to do, let's just take a broad look at the order book and see what some of these potential targets could be, and then we'll get into the candle charts. We'll get into the liquidity as it's moving around, and it is moving quickly, by the way, and even take a look at ETFs and what's going on there as well. So let's start right here on this guy. And I posted this actually on X a little while ago this morning, kind of some potential landing zones. Here you see these are all prior consolidation ranges. This is the 50 to 52K range. We're pretty much annihilating that right now. We're actually right at support at 50K. But I'm going to show you here in a second. Bid liquidity seems to be thinning out and moving lower here. This would be the 40. This whole range here was like 40 to 45K. The sweet spot up here around 44, 45K. And then, if this doesn't hold, we could potentially go down into this really early range of consolidation, 25 to 30K range. This is really where this market took off from. And none of these levels have ever been retested, which is something that I've been calling for since we left each of those levels. I certainly didn't expect it to take as long as it did, and I certainly didn't expect the cascade to be as deep as this all at once. You know what they say about straight lines? They tend to not be sustainable, and here was a straight line up, and we pretty much retraced that from the 50K range. So what's going to happen here? Is Bitcoin going to find its footing, or are we going to continue lower and potentially really, really deep? So let's go ahead and look at the candle chart for starters, and I tell you why I'm interested in these targets. Okay, these are the prior consolidation ranges, as you can see. Actually, coming off of a trend precognition signal on the A2 plus algo, that's the arrow up here. That was a few weeks ago, right? And now this week, after the candle closed last night, we did get a new signal here on the A1 algo down here, and you can see things are trending down. Same with the MACD at this point. So this is the 50-week moving average, this red line here. And we're kind of falling through that at this point. It was hovering around this level here for a little bit this morning, and now things breaking down lower, now sub 50K. Did you think we would be sub 50K? All you maxis, did you think that we were going to be just off to the races? Sub 50K is possible. I've been calling for retest of these levels since we left them, and this is really where I would like to see things land to keep any glimmer of hope intact for this market to continue and rebound from here. As you can see, this was the 40 to 45K consolidation. And as you can see now, there's confluence with the trend line. This trend line begins down here where the market started after the FTX crash. This is down at 15.5, right? And so we do have some confluence here between this level and the trend line. So getting into that 44, 45K range, to me, would be the ultimate. That's a spot I've been calling for a long time. I'd really like to see, since things are breaking down at this point, I'd love to see that hold. If it doesn't, we've got bigger problems on our hands. Obviously, we have some moving averages right here, but gosh, if price plummets through the 200-week moving average, It's going to be very, very difficult to recover from that. That would send us back down to this 25 to 30K range. There's even a gap down here. All you gap traders, there's even a CME gap way, way down. So the gap, people got excited over the weekend when price started falling through. Well, the gap doesn't fill until the market opens, right? So that's how gaps are created. That gaps are created when TradFi is closed. So with the market opening here in just less than 5 minutes, a recovery would fill that gap. A recovery from here would fill that gap. But if we don't recover just yet, are we going to go back down into those other ranges that I mentioned previously? Maybe the 44, 45K range, maybe even the 25 to 30K range, which would be down here. And look at this. If we got down to this, then that old school gap, this is from back in March of 2023. There's actually a gap down here in the 20K range, right? It's possible. Nothing is off the table here at this point. Now, this does a lot to hammer the narrative about Bitcoin being a store of value, and it is really going to test, in my opinion, for the first time, our ETFs. Because, well, first of all, ETH is getting destroyed right now. So let's just take I haven't even looked at this chart. So this is live in the fire here. Look, it's come off the page here. So ETH has now lost the 0.5 and the 382, and it's really, really not looking good for ETH right now. Of course, we did see a huge correction, within 2 weeks of the Bitcoin ETFs rollout. So this could be comparative to that potentially. But where's the recovery, right? There hasn't been a ton of excitement over the ETH ETF, nowhere close to what we saw on Bitcoin. And are these guys going to get shaken out? So we did, towards the end of the month, see a little bit of a rotation, not really as much as I had hoped to see. We did get a couple of positive days. Friday, I expected to see even more rotating into ETH, but we had things already starting to deteriorate in the market, so it didn't really happen. On the Bitcoin side of things, this is where I think things could potentially get tested. We've had very few, historically, very few. Let me go to a bigger. We're going to look at the whole lifespan of the Bitcoin ETFs, and BlackRock's IBIT literally, I think it's only had one day of selling, and I think that was actually a lot of people chalked up to a May 1st rebalancing, right? We saw selling across the board here. That's possible, but there's been no real sell pressure from that side ever since. Now, I've seen a bunch of different numbers in terms of what the average cost basis is for those Bitcoin ETFs, and it's somewhere around 58K. So those guys are getting tested today, right? How much conviction do they have? Is this a long-term diamond hands investment for them, or are weaker hands going to get shaken out? Now, there's no doubt in my mind that there's going to be at least some shaking out today, but how big is it going to be? So that's something that we're going to be watching here as the market closes today. In terms of where things are at the moment, let's take a look at Bitcoin in FireCharts. Here's a long-term view. You can see that we now have liquidity laddered down, actually laddered pretty deep here, down to now even a little bit extends down to the 30K level. This is not a high probability, in my opinion, at least not at this point. You can see the heavier concentrations here at that 44, 45K level. And here at the 48K level. A lot have been calling for 48K for a long time. And, well, remains to be seen. There's about 38 million stacked there right now on Binance, and another 35 at that 45K level. But liquidity has been moving. It's been moving a lot here. I'm going to go back to the regular view here, and let's see as we zoom in to lower time frames, if we can get a better bearing on what's happening, right? Liquidity continues to shift, as you can see. So I'm going to add some contrast here. As you can see, for some reason, somebody's fortifying that 70K level right now. Not like that's coming into play anytime soon, but liquidity is real. Look how thin liquidity is on the way up, right? So it would take nothing to climb back up. I mean, we could shoot back up to the 60K, 65K level very, very quickly because it is razor thin. And that is why you see so much happening with this smaller class in the order book, right? This is not likely just retail. When you see an aggressive move coming out of the orange class like this, especially without a lot of contour to it, good chance there's some T-whopping going on. Let's take a look and see how much volume might be happening there on that T-WAP strategy, if that is indeed what it is. Let's see. They were down, got down to about million and a half, and then all right, so that's about 9 million bucks, roughly, in just a few hours. So that's not typically retail doing that, right? That's going to be a whale making small buys. And why are they doing this? Are they doing it just to hide their intentions, or are they doing it because they can't? If they make $1 million order, you see how much slippage you're going to have. They're going to go. It's $1 million order would send them up $1,000 or more in slippage, and I'm ballparking it. Don't If you're a quant, please don't hammer me for this, right? By the way, guys, chat is open if you want to chime in here. And before I get deeper in this, let me just say I do apologize for not being able to post a bunch last week. Things got pretty hectic with the family here, and um, and my portfolio got punished alongside a lot of people's because I wasn't able to give it the attention that it needed in this kind of volatility. So at the moment, how do we salvage? I've trimmed some positions. I have made a couple of little scalps to mitigate some of that. But at this point, I feel like a bounce will come at some point, right? Because let's face it, straight lines are not sustainable in either direction, right? But this one could go deeper. So that's my concern here, right? Where are we going to land here? We're getting some, things are fighting around this 50K level right now, but we didn't consolidate here for very long, as you can see. And we spent a lot more time consolidating in this 44, 45K range, and even longer down here, right? The fact that none of these levels were ever retested is really a good reason for this to be happening. Now, what kind of triggered this sell-off since last week? And that for that, we're going to look to something that a lot of people are concerned about, and that is the unemployment rate, right? We saw a spike in unemployment. And historically, when we see spikes in unemployment, that's really the laggiest. Unemployment and home sales are really the laggiest of the lagging indicators that the Fed has been watching. Those rate hikes have worked their way through the system, and now we're hearing there's chatter all over Twitter, all over X, excuse me, calling for an emergency meeting from the Fed. I've not seen a credible source for that. There's a bunch of crypto outlets and so-called influencers who are posting that the Fed is having an emergency meeting. I see no evidence of that coming from a credible source yet. Doesn't mean it's not going to happen, but I've not seen any confirmation from that. And quite honestly, I think an emergency meeting and an emergency cut at this point would send the market into a panic, a bigger panic than you're seeing right now. So I don't know that that is the healthiest approach to doing things. I'm no economist. Doesn't mean I don't think they should cut. Just means, in my opinion, if they do that on an emergency basis, it could get things could get pretty scary here. Now, one of the problems with looking at this metric here, at least in terms of Bitcoin, is that Bitcoin hasn't really been around long enough to be through to go through enough cuts to get really a good bearing. Sometimes price dips, sometimes price spikes after these cuts, and really, again, this is something that I've seen a lot of chatter about, on social media, saying after they cut, price tanks. Well, it really depends on what the outlook is after that cut. If it's a cut on an emergency basis and it's super aggressive, the market is going to panic and think that recession is imminent, and that is not the approach that the Fed has taken through this whole thing. Powell has been slow and methodical, so I'd be super surprised to see an emergency cut happen here. Doesn't mean it can't happen, but is a bump of um, 2 basis points enough to panic, right? We're not looking at a five handle here. Now, we could get one by the end of the month, perhaps, but I think that we need to take this in perspective. And like I said, Bitcoin in its short lifespan has only been through one rate cut, or one, yeah, through one cut, and that was COVID related, right? This is a bit of an anomaly. We had this massive spike in unemployment, and we rarely see anything like that. I guess what I'm saying here is we really have to watch and see how things develop here before you panic or you think that things are guaranteed. Nothing is guaranteed. Nothing is written in stone here. So take that with a grain of salt. In terms of what the market is doing, uh, you know, obviously we're seeing a sell off here in the broader markets, and they just opened a few minutes ago, right? So look, gapping down, gapping down. This is obviously expected. Again, there was a big pullback in the Japanese market. Um, Lots of suggestion that that might be really related to a carry trade ending, but not going to dive into that because that's not my area of expertise. What's that, Mike? Hey, Megat, I appreciate the sentiment. And Mike asking, might it be more to do with QE than a rate cut? Well, really, um, it kind of works its way through the system the same way, right? Right. I don't think we're watching the money printer at this point, but uh, tightening is a rate hike, and easing is a rate cut. So uh, that's how I interpret that. I kind of interpret a rate cut as easing, as QE to some degree. So um, there may be others who challenge that, and I'm certainly open to those conversations. Back to what's happening here with liquidity in the order book. Let's go back to FireCharts and see how things are changing. Again, the market just opened, and we're seeing a bit of a bounce right here, bit of a bounce. But is it indeed? Um, Look who's not buying. Look who's not buying down here. So this is, again, because liquidity is so thin, it's easy to see price move up, but will it will it be enough, right? Are we going to see another wall come in here or develop here to knock things back down, potentially to this 48K level, or potentially down to this 45K level? That's where the liquidity is right now. So even though I pointed to potentially going lower because of these prior consolidation ranges, we don't currently have much in the way of liquidity down in this range. In fact, nothing down in this range at 25, and very little at 30, um, to say that sentiment is there at the moment. So that could change. Obviously, nothing influences sentiment like price, and so if price continues to erode, we could see that. But at the moment, we're getting a bit of a pump off the bottom, and maybe this the um, feeds the gap fill that everybody's been waiting for, right? So we got a long way to go to fill that gap. I mean, this would be a hell of a swing trade. The question is, if we did fill this gap today, or this week even, is that the end of it? Is it over? Is the worst over? Or is this just going to be a relief rally and we're going to see more of a breakdown that would be relative to potentially what we saw back in the 2021 top, right? We had this, we dumped, we had a relief rally. Well, where are we now? Was this already the relief rally, or might we see something more? Or maybe we bounce from here, or we bounce from here, and then we get the correction that we were looking for. In terms of the structure, we had this cup and handle thing going, and we need to see volume continue, and we really didn't want to see a lower low. So this is a bit of a concern to me in terms of this structure. I'm gonna have to do a little bit more research to see if this actually invalidates this structure, because we have the cup, we have the handle, we do have decent volume kind of trending up in terms of what we've seen here, but this lower low now means that this is not yet the recovery. If this is to remain intact, that this what we saw right here was not the recovery. In fact, it was a lower high. So that to me points to more downside. Whether it stops right here at the 50-week moving average remains to be seen. This target right here is one that I would love to get, but you know what? Market doesn't care what I like, doesn't care what I want. So you need to choose wisely. Looking at again FireCharts, watch what's happening right here. We're starting to see a bit of a recovery on price, a little bit of a bump, but now it's rolling off the top. So what's going to happen here? I'm going to keep watching this throughout the day, guys. And if you want to do the same, I suggest you get a hold of FireCharts. If you're interested in any of the tools that I'm sharing here, by the way, guys, you can score them over at materialindicators.com. I've got links in the profile to get you there. But at the moment, we do have bid support down here at 48 and stronger and a bit more down here at the 45K level. I'm not convinced this is over yet, right? Markets just opened. Sure, you should be fearful. I mean, you should be greedy when people are fearful. And guess what? I think the fear and greed index is going to drop more after this today. So let's see how things develop during the day. If you're looking at trim positions, it might be a good idea to look for this rally, look for the relief rally. At least to mitigate some of the losses if you're trying to scale out. And Bill, can we take a look at Kingfisher Gex? A lot of options hint at future liquidity. My suggestion: hey, great guys over at Kingfisher, but go check their stuff out because you can get into a lot of their stuff for free. So by all means, go check that out on your own. Not going to spend some time in the stream at the moment doing that. My focus here is obviously on the key levels that I looked at here and what the liquidity is doing here. So I'm looking to see whales start buying. Obviously, they can't buy with any real volume here until we get into more liquidity up here. But you could see, even the smaller order classes. Yellow is obviously doing it now, but there's room for green. There's room for green to start spiking up here. And start buying more aggressively. It's not happening. But what is happening? We're seeing ask liquidity drop back down lower, right? You see it right here. Tip to tail. They just moved it down. So going to push things down lower. 48 could come into focus pretty quick. And here's what I'm hoping for. I really am. So we'll see what happens, guys. I hope that was helpful. At least gives you a little bit of insight. At least gives you some things to look at and consider. As you can see in real time on FireCharts 2.0, we're seeing price continue to wrestle with this level here. I think this is going to be a very interesting day. Look, whales just purchased into this liquidity right here. So at least they're considering, let's see how big that order was. Could not have been very large because of the thin liquidity. They were down 15, 16 million, bumped it up 3 million. So this block right here ate pretty much all of that. Let's see if it, looks like it could be replenishing too. So this is going to be really a volatile, spicy day, guys. I encourage you to stay focused, stay in tune to the channel. And if you're interested in the tools, check them out at materialindicators.com. Have a great day, everybody. Hope it is hope you find some opportunities in this and don't get punished. You got to protect your portfolio and you have to not panic here. Make smart decisions. I know that can be tough, especially when things are breaking down this much and you're watching your portfolio degrade this way. But there will be opportunities when all is said and done. The question is, where do they land? So really, in my opinion, dangerous to catch knives in this. Maybe you've got your eye on targets and you want to DCA your way in. That's probably the safest way to go. But the most conservative, that's a decent way to go. The most conservative approach is to wait till things settle down, wait till you see buying come back with volume, and then scale your way scale your way into those positions. Going to wrap it right there, guys. Again, if I see more developments through the day, I'm going to do my best to keep you guys tuned in. In the meantime, have a fantastic week. It can only get better. It can only get better from here, right? All right, guys. We'll see you soon. Thanks again for the support. Appreciate it.